Okay, great, guys, and welcome to the European crossover webinar. And just want to move in right now with the take a quick look at the S&Ps here that we had actually had, and this is a story that got things popping later on in the day, very late in the day. Was we were still hanging around here, and the S&P just kind of hanging around here. Looked like the market may kind of finally tire itself out, and then the report that Treasury Secretary Steve Mnuchin had mulled over lifting some trade sanctions, and that set the SPUs rallying higher. Also, dollar yen took off, which is still near its highs. Aussie yen took over, also moved higher. So that really got things clipping. They've actually later denied that story. We'll take a quick look at that. Just want to take a quick jump across the board. Got the euro dollar still hugging around that 114, has not been able to push above it. And obviously the big news was the pound rallying up and ticking off right up here to the 130. The Aussie dollar had also rallied on that news. It's actually pared back a little bit, but the dollar yen is still hanging on, close to its upper region. We talked about the importance of the 109.27. And we are just above that 109.27 right here. Actually, right here, and I kept this in. I'm glad I did. Kept this fib here because 109.57 is actually the 50% of this entire move. The dollar yen is still continuing to hang on to its gains right now. But we'll take a quick overview of things, and then we'll get started into the analysis. Okay, for days now, German Foreign Minister Heiko Maas has been niggling the idea that that there can be new talks with Britain on Brexit. If this was genuinely Berlin's position, it'd be a major shift with big repercussions, but it's still not clearly exactly what he's talking about, whether or not his views that of Angela Merkel, who is, as the chancellor, is the final say. Last night, Maas said we need to talk about whether the accord can be opened and recalled that any change would require the assent of all 27 and other EU states. He's not made clear whether he's talking about the divorce agreement part of the accord or the political declaration of the future ties, or under what circumstance the European Union could reconsider its position. Bear in mind that any default in the EU stance is that it can only review its stance on the future ties if Britain changes its stance. For example, Britain says it wants a softer Brexit, if not nothing more than reassurances are possible, but that is self-evident. If Moss is hitting at anything beyond that, a speedy clarification from him would be useful. In the meantime, it's worth recalling that Merkel told reporters, according to those present at the meeting, it's clear there cannot be any negotiations. Let's go and move on quickly on the markets. It says world shares have inched higher and are just off 5-week highs, following a Wall Street Journal story that the United States is considering reducing tariffs on Chinese imports. The U.S. Treasury later denied the story, but has been enough to sustain momentum after Wall Street closed almost 1% higher last night, led by trade-sensitive industrial stocks. Clearly, markets have chosen to interpret this as another sign of a U.S.-China trade deal is nearing. The MSCI's index of global shares is up for the 4th week in a row. It's the longest weekly winning streak in 6 months. Mainland Chinese shares have roared ahead, up almost 1.5% on the day. And Japan's Nikkei has hit a 1-month high. Any trade idea will be crucial for China, which has already displayed signs of slowing economic momentum, and data on Monday is expected to show fourth quarter growth at its slowest since the 2008 financial crisis. The trade optimism has not budged the yuan dough and is down the week and snapped a 3-week run of gains against the dollar. On the Brexit front, sterling is encouraged above ensconced above 129, and while weaker this morning, is not so far made its best weekly gain since early November. Markets appear increasingly confident a no-deal Brexit will be averted, a second referendum held, and an opinion by EU lawmakers that the UK can extend Article 50 without participating in the European Parliament elections could be making investors even more confident that the delay and a soft Brexit are the most likely outcomes. PMA's Plan B and amendments to the motion will be voted on Parliament on January 29th after being presented on Monday. Also on the data front, U.S. data industrial production may show another increase in December, but consumer confidence survey from the University of Michigan for January might be more interesting if it shows any negative repercussions from the U.S. government shutdown. So that will be key today. The University of Michigan trade war optimism is expected to lift the European stock markets this morning after boosting shares on Wall Street and Asia. And we'll go on and quickly move on. As I mentioned here, let's take a look here. And going on to the Australian New Zealand dollars, got a flip on Friday as a report of progress in the Sino-US trade talks buoyed the risk sentiment, though both currencies still nursed losses for the week. The blip came after Wall Street Journal reported U.S. Treasury Secretary Steve Mnuchin had discussed lifting some of all the tariffs imposed on the Chinese tariffs. The Reserve Bank of New Zealand last year left the door open to an easing if economic growth or inflation disappointed. Its first policy meeting of the year is less than a month away on February the 13th. However, we think details will be hawkish from the RBNZ's point of view, noting the softness would partly be due to a drop in retail or petrol prices and a seasonal fall in the cost of vegetables. A sharp drop in fuel prices is a temporary shock and is more easily looked through, he added. And moving on to the pound. Now, this is the big mover of the week and the day. The pound weakened on Friday after stellar gains this week that set the currency up for its biggest weekly gain against the euro since early September on growing confidence that a no-deal Brexit can be avoided. For now, focus turned to the January retail sales data out at 9:30 GMT for the latest clues on the UK economic outlook, which has been taking a backseat in recent weeks for traders. In a tumultuous week for British politics, Theresa May's deal suffered a heavy defeat, and against the euro, the sterling was down over 1/3% at 87.99 pence, and below 2-month peaks hit a day earlier at around 87.65. With each uptick in sterling, it shows the markets are less and less concerned about a no-deal Brexit and less concerned about election risk. And on to the dollar. The dollar steadied on Friday, but was set for its first weekly rise in 5 weeks as doubts grew on the ability of other major global central banks, such as the ECB, to start raising rates this year. While the prospect of another Fed hike has been virtually ruled out of money markets this year, markets are also whittled down the odds of the ECB raising rates on the back of the weak economic data. Money markets are signing less than a 50% probability of an ECB hike this year, and 80% likelihood of a rate hike from the Bank of England. For non-dollar currencies, to make further gains from these levels, we have to see evidence that the major central banks are beginning to tighten their policy. Weaker economic data is also featured in China. Still, despite weak economic data, sentiment was slightly boosted on signs of growing optimism in trade talks between China and the United States. Chinese Vice Premier Liu He said that he will visit the United States on January the 30th and the 31st for the latest round of trade talks aimed at resolving the trade standoff between the world's two biggest economies. The pound managed to hold on to most of its overnight gains against the euro as traders wagered on a second referendum on Britain's EU membership. And lastly, we'll just go and quickly finish up with gold. Well, palladium's been grabbing the news as it's had a pretty good move here. Actually not just a pretty good move, but a very sizable move. Point here, palladium now climbed 1.1% to $14.11 per ounce, having hit an all-time high of $14.34 on Thursday. But as I said, most of my concern is really just with the gold market, and he was stating here that gold still needs to see a move higher here. Gold was set for its fifth straight weekly gain, supported by expectations that the U.S. Federal Reserve may not raise interest rates this year on worries about economy and uncertainties about Brexit. Gold does need a trigger to spark it upwards, either in the way of a weaker dollar, renewed stumbles in U.S. equities, or a clear indication of slowing U.S. growth. Well, let's go on and move on. And here was the data I was trying to go and pull up. We do have retail sales coming up at the bottom of the hour in the UK, and Canadian CPI is going to be out at 8:30 Eastern. And industrial production. Well, here's the dollar yen continue to push higher. And one of the things that we're looking here, and I myself still have a short, and I'm pretty close to being stopped out, but it's 957 is going to be the 50% of this move here. So very interesting. We've continued to move higher. The S&Ps continue to keep their pressure on here. Look at that right here near the highs here for the S&P right there, 2642. Obviously, the big story was, I mean, not big story, but the catalyst was here with the Wall Street Journal report about Steve Mnuchin, considering pulling off these tariffs. Let's go on and move on to the euro, though, as we start the analysis. Well, at least for right now, the key here is this 14.22, and this euro has barely poked its head above 14. It's really had some difficulty with that. When we pull up the bias chart, it's still going to remain 14.22. If we can bounce above this 14 area, it's going to be 14.22 that's going to be key here. So nothing has changed here. You see this coming right across here, this low here, right up here. So that's going to be your key resistance for right now. Let's go and take a look here on the 2-hour chart. It's actually held up. I mean, it could break lower, and actually, when we were moving lower, we talked about. Remember, it held that 1371, but it looked like the euro was going to slide even further yesterday. And I mentioned to one of the guys, the next area is going to be this 1351, and that's going to be the support right now. If we turn around and wilt going into the close, is going to be this 1351 here. Let's go and take a look also on a fib. This is also the 61% of this entire move from 1217 on up to 1570. So right here, this also turns out to be the fib here, 61%. So that's actually going to be our support for today with the euro. Then we actually have it marked off at 1350. So we'll just put it right there. I'm looking here on the 30-minute. You would think this was like a 3-minute chart or something like that. We just haven't moved at all. There's just no movement here out of the euro. And, lots of times on a Friday, we see the dollar really start to reassert itself. And that's one thing I'm thinking of is if we play that same route and then the euro starts to slide. But we are just stuck in this range here, a very, very tight range. Really, wouldn't even call it a range, almost like non-movement at this point. So we'll see if the key area once again is going to be that 1422 coming in right in here. But the door is certainly open for them to go on and weaken. but we may not see any real move until the beginning of this week. The only thing is, like I said, on Fridays, the dollar continues to strengthen. Seems like each Friday we've been weaker, but usually on a Friday we start to even things up. Well, we're above that key 96. I wouldn't say above it a lot, but we've been straddling that 96.08 pivot we talked about. We'll get to that. So once again, it's going to be the 1422 and 1350, with 1351 being the 61% of this entire move from 1217 to 1570. Let's go and move on to the big mover of the week, which is the cable. And be just for a moment. There we are. We've made it all the way up here to this 2987. I had this level in here before, here on the daily. Boy, what a move we've made here in the cable. As things have started to ease up since the vote. It's pretty amazing that we were able to make that run all the way up to 130. If we're looking at resistance now, there it is right there, 2987. And we look at it on the daily, 2987 right here coming across. We had that level in here before. Early in the day, I looked at 2951, but it actually says 2987. They were able to tick off that 130. So let's go on and put 2987 for the bias chart resistance. Certainly the momentum has continued to go in the way of the cable, and obviously you want to be picking it up on dips. And where are we going to go and find the support? I don't know if it's going to make it all the way down here, which is going to be 2859. We'll take a look at it on a 30-minute. Well, at least on the 30-minute, we do have a little sell signal on the exponential. Let's see if we can find some confluence in here. Makes sense, 29.23. And just to lower that just a bit, we'll call it 29.15. 29.15. And 29.23 would be the 23%, but we'll go with 29.15. And let's go and take a look now with the Aussie dollar. we're kind of getting this bit of a holding mode, and although we did see a decent reaction off of the news, if you want to call it news or fake headline or whatever the case is, with the Steve Mnuchin story about possibly mulling, taking on some of the tariffs. We've actually we're kind of stuck in this little area right here in the daily, and we'll look at it a little bit closer look here on the 2-hour chart. Pretty good strong move on that, and then we somewhat pared back from that area here. Coming here, this is going to be right here at 72.02 for resistance, 72.02 for the Aussie. And as far as support, short-term basis is going to be, I think we had moved it just a bit below here. Yeah, right there at 71.36. So no change there on the support here for the Aussie dollar. And we're just rolling over here to generate a little sell signal on the 30-minute here. So we have moved, and my momentum has dipped further here, but on the downside, we'd be looking right around 71.36. So about a little over 40 pips away. Give an idea of where we stand for the week. We did go in and run out of momentum here at the 61%. And we've started to pare back, even more so in the sense than the Aussie, not a whole lot more, but let's go and move into the 2-hour chart. And I think we had that right there as our resistance. Yeah, sure enough, it was 67.88, this is where the market, if you look here, just right there at 88, ran out of gas right there, just before the 88. It was our resistance. High was what, 86, 87 and a half, 87. Paring back as far as support, we had 67.17, just like the Aussie, just below this key area here. So no changes there. We'll keep the 67.17. Actually, just move it just a hair right here. That's not even much, but we're going to move it down to 67.14. I'd still call this had a pretty good move, but still, once again, I'm going to keep this for a range. Now, the Aussie was completely different, the move that we sustained there, but we're going to keep the Kiwi basically as far as a range. Yeah, let's go on in. Move on to the dollar CAD. continue to keep this 33.14, and the market's just kind of just steady and holding pace here, just keeping itself in check. After this run here, we got up here to this 33.14. The market is really quieted down, and we're just kind of keeping time. That's what I meant to say, just keeping time. Look at this, boy. This is really quieted down here. Just sitting there in a very, very tight range down. This is, these are 2-hour bars, and look, they've been in about a 30 pip range over the course of this. After ticking up here to that resistance that we had, which was the 33.14, that 33.14 is still going to remain as a resistance. Now, as far as support, well, we had 32.42, and the market seems to be just keeping itself in check. And here's the 42 right there. We're going to just move this just a little bit lower here, not even much. Just to 32.40. We're close to generating a sell signal, but we're just keeping time for right now. But let's go on with this here. Just a couple of pips lower here. And let's move into the dollar Swissy. We'll continue to get that little bit of an upside momentum, obviously with the dollar being stronger. And this really took advantage of that move when we took off from that 99 and really pushed higher. Looking at the dollar Swiss, we had the resistance here at 99.29, and we've even gotten beyond that. The key looking just above here. $99.57. Boy, and this dollar Swiss really has the momentum here. Well, 99.70 is the 61%, and almost coming up against a level in here. A little bit of volume. And some volume coming in here. This is even a decent level here, and they're trying to see if they can push that even further. And being a Friday, certainly the momentum is going the way of the dollar. We're going to go right there with 99.61. 99.61 for the resistance here on the for the Swissy. And you'd have to go and change this now to bullish now, as this move stayed sustained. This, the dollar switch boys really made the most of this move here in the dollar index. Although the dollar index has moved higher, it's the dollar Swiss has really taken advantage and gone forth. And kind of think back to earlier in the week. Remember when they, at the beginning of the week, when they were able to move off of that 95.65 in the cash dollar index, and really, I guess, open the door for this to continue to move with this momentum here. As far as support, going to come in right there. Although it's a little bit of a ways away, but it's going to be at right there, 99.10. 99.10 for the support here for the dollar Swiss. Looking here on the 30-minute, it's just been a steady climber the entire way after generating that buy signal. It just has not let up. And let's go and move on to the dollar yen. So this has been a pretty good little mover here, and we're looking at this 927 as a big pivot level, and now we were struggling a bit on that, finding whether or not we could close above it. We didn't close above it, and now here we are now moving above it. Now, as I mentioned, certainly the momentum's going with the dollar, and we're at the end of the week. What I was looking for is if we're able to get above 927 to see if we got two consecutive closes. Well, I may just find out today, but we are here at the 50%, which is 957. So I want to see how the market reacts here. If we finally get a bit of a pair back here, obviously that whole Steve Mnuchin story kicked things into gear and really got this pushing above here. I'm curious to see how we close the day here. If we're able to close above the 927, it certainly looks like that would be the case, but we'll find out. But resistance here. Let's move on to the 2-hour chart. Let's see, there's some additional resistance. That's not all the way till 973. 973 for some daily resistance. This is on that continued break that we saw here. And boy, if you think about it, what a move back here. After this huge fall here, let's take a look at this on a weekly too. Key weekly is right there. Right there, 986. Boy, what a huge move back. If you think about off of these lows, nearly 500 pips off of these lows. Now to look at this bar, lots of times I'll look at the body and I'll look at if you look at here, we're almost at 50% of the body. Look, then there's a 50% there, but yeah, just right about 50% of this bar right now. Now, where support? Well, it's pretty obvious where support would be right now. It's going to be the pivot, which is the 927. We'll see if we see something else on the 2-hour. Right there, we'll call it right there, 920. 920 for support for today. And boy, what a change we've seen here. On a very short-term basis, now we'd have to go and change this to bullish on a very short-term basis, because certainly bullish is what it is right now. But what a move we've seen here. Let's now go and move into the cash dollar index. I generally don't use the trend lines, but I've had this one in place. I even forgot about right here, but we're just holding just right here at this trend line. If you look at this, I do my trend lines across the bodies because I always go where the volume is as opposed to, the very high, the very low. And so we're just holding here. As I said, 96.08, we had that in our analysis. And here's that key level I talked about is the 95.65. We know how important that was over 2 weeks ago when we dropped down. We saw a pretty good rally, open the door for us to move lower. We did. We came back and forth, and then we started out the week finally jumping and getting above here and grabbing a hold. And certainly that's when momentum is gone. And certainly the dollar Swiss has made the most of that momentum. We're going to move into the 2-hour chart. Let's see here if there's something we see here. This 96.28 right there coming across. Well, that's just going to open the door for some higher moves if we were to get that. But let's take a look here on the 2-hour. You can see here we're just straddling this pivot here. And when I say a pivot, not in the sense of the big pivot like this, but we had that marked as a little intraday pivot, and it's been just going vacillating back and forth over the last couple of days here. Yeah, there it is. It's going to be 96.28. That would be the resistance right here coming across here, 96.28 right there. And it's just above the high, about a tick or so above the highs. Well, for now, we're going to have to mark this off as bullish, if nothing else, for the short term, which it certainly is. And the momentum's still going that way. Now, when we look at the support, we actually had it marked off. Remember from yesterday, we had this marked off for the pivot area here, not pivot, but that big defense that we had on the daily, which obviously would make a lot of sense. The 95.65 here. Well, I think the market's proven itself is going to actually be, higher than this 95.65. So let's go on and move into the 2-hour chart, or back to the 2-hour chart, I should say. So on a short-term basis, support comes in right there at 95.82. And with this being the end of the week, certainly I don't think people are going to be necessarily trying to fight the momentum. So once again, we're moving those levels up a little bit higher, and the momentum stays here. And it's the end of the week. The dollars has that momentum going forward. And don't really see people trying to turn around and step in and take the other side. The euro itself, in itself, has been very, very quiet over the last few days. And we'll move on to the gold market. Well, one of the things that we've hung our hat on is about this weekly and how the momentum, we even saw that they mentioned in the story also, it's up for 5 consecutive weeks. And once we've talked about this going forward in the sense that over the last few weeks, or not last few weeks, but last week and a half, almost 2 weeks, this thought that anyone that's been long and is holding positions for a little bit longer period, they just keep looking at the weekly close, and as long as that move remains higher, there's no need for them to go and just jump out. So we'll see how we close out this week. This would probably be if we were to move a little bit lower, looks like we'd probably close just below that. Market is getting a little bit tired, and one of the things is, after the big news story, fake news, whatever it was, on the Steve Mnuchin thing, that with the equities moving higher, the dollar holding its bid, now it's opening the door for gold to edge back a little bit from here. It's kept its upside, but now we're starting to break a little bit here in the gold. So for now, unless you see the dollar turn around and unwind, this is going to be the resistance here. We'll call it 1292. So that we'll ratchet this down. And for support, Well, the support's going to come in if we were to go and start to break here. We've started to roll further. They may want to go and test those stops. It's going to come in right at 12.79. We want, more importantly, we want to see how we close out the week. Give a moment. And this will be key. I mean, we've hung our hat, I don't say so much, but we said as far as, hey, look, the momentum's still high, the momentum's still higher. Well, let me move back in here. This will be important. If we can close, this will be very important here. If we can close below, well, actually 1284 would take out this prior week. So what may happen then, we may find ourselves, because of the things that flipped around in equities and now we've turned up, now we might find ourselves trying to work a little bit lower. Work lower, that support now is going to come in right there at 1279. But it's going to be interesting. Like I said, you may see some further stops hit if equities hold their gains, and then maybe we'll start to see a little bit of a, depending on how we close the week, a little bit of a pullback. So supports now for today is going to be 1279. We are starting to lose some momentum now. You can see we've actually had a sell signal here on the 30-minute in the exponential arch, and we saw this from yesterday, which was from the day before. You can see here, and it's been on that sell mode. So if you're just going with the momentum play, it's been on that sell mode, and now we've just exacerbated that move. For good reason, although, even though it was on the sell mode, you can see here the market was still holding up very well, but you can see the momentum had been lost, but we were still holding up this 1292, but that story and the dollar still holding its gains and S&Ps are holding up close to their highs has kept that momentum, and it's actually strengthened it and it's pushed it further. And we're not finding a reason necessarily for gold to go in and, push that further. Matter of fact, if anything, surprised it was even able to maintain this 1292-ish area here. Finally, we're succumbing here, moving lower. A moment. Now let's go moving now to the bonds. And these have moved correspondingly lower with the upside move that we've seen here in equities. Let's get this. Well, we've broken past this. Our support was going to be 4503, but it makes sense that we're going to break below that in light of the run that we've had in equities. So let's go on and load this up. And look at that, still holding near these highs. So support now is you're going to look for this thing potentially, if we stay higher here, to rotate towards this 38%. But in the short haul, support will be right there at 44.17. But it's still bullish overall. And when we look on the upside, and certainly, like I said, with the move up here in the S&Ps, to be quite honest, I'm surprised that the bonds are even doing this well. I would have thought they might have hit some stops, so there might still be some questioning whether how far this move can move, but boy, it's been one heck of a move here, you know, on that jump on the Minuchin story. So resistance would come in right here, which is going to be 45.11, and you can see the importance of that 45.11 here. Right there, you see that coming across here? So it's going to be 45.11. And let's go move into the buns. Well, we've seen quite the move back in light of what we've seen in equities. You know, coming into the Brexit vote, we'd moved higher, and you know, I don't want to say the thought was, because they were saying, you know, we don't know if it's going to break higher, it's going to break lower. What kind of move we're looking at if we don't get, if the Brexit vote didn't come, or the Parliament vote, I should say, doesn't come around, does that ease tensions? So, or does it throw more uncertainty? So the bonds went back and forth, and now they're back below the pivot, not the pivot, but the break area here, the key level here, the 64.10. Well, with the move in equities, it certainly has lightened things up, and lightened things up that certainly have pushed this lower. Let's take a look if we can find a fib in here after what's been a huge move with the bonds. $63.23 would be the 23%. That seems like a long ways down, but I tell you what, once these boons get moving, they do move rather fast. Support on the short haul, though, it's going to come in right there, 63.38. And we almost got there. And resistance, 63.80 right here. 63.80 for resistance. We'll go with the 63.80 here on the resistance. On a short-term basis, we're going to have to say that this is going with the range now. It's not so much bullish. Well, it remains overall on a long-term basis bullish, but we're all over the place right now with the buns. And let's go and finish up with the DAX. And boy, what a move we've seen here in light of what we've seen happen in the S&Ps. And I think it's pretty obvious where resistance is. It's going to be 10.59 here. It's actually 11,059. Been so long before we've talked about 11 here when it comes to the DAX. Let's see if we can't get also if we can't get some type of a confluence with the fib. Whew. Boy, this thing has really come. And we really can't even consider this a good fib level. I guess you could, but it didn't even take out this prior high here. So if you looked at it from there on a short-term basis, also 11,076 is going to be the 61%. But once again, this 11,059, we're going to use that for support and for, apologize, for resistance and for support. Coming right across here, 924 for support here on the DAX. And the euro staying relatively quiet here. Dollar index still holding. We have that little pivot there that for the last few days, that 96.08, but the resistance comes in at 96.28. Dollar yen is still holding up here, but we're actually at the 50% here on the dollar yen. We'll take a look at that quickly. Here's that pivot, but we are right smack dab at the 50% of this entire move from 464 up to 1454. S&P still holding up very well, so we'll see how we go on and close out the week. But I'll go and get the bias chart posted into the chat room, and thanks for joining us here on the European Crossover Webinar. Good luck trading for the last day of the week.